Okay, ready guys? Okay.
Alright, our company we decided to pick was Planet Fitness. I'm Riker Lear.
And I'm Nicole Marshall.
So just a quick agenda, we're just gonna give you a little bit about Planet Fitness, our recommendation, the evidence behind why, and just a couple metrics that go with Planet Fitness.
So about Planet Fitness, they're one of the largest growing and fastest growing franchises and operators in the United States by number of members and location. Their CEO, just to give you a little background, has been with the company since 1993 and has held the CEO title of CEO since 2013. And the CFO has also held his title since 2013, so that's relatively a good tenure for a company. And they really talk about their judgment-free zone, which attracts new customers and retains their current customer relations. And memberships start as low as $10. We do get towards the end into the membership fees a little bit more of what that includes. And the industry average for a gym membership is currently $52, so they're well below that average for the industry. So our recommendation is to buy. Their current price as of last night, I think it changed a little bit this morning, but their current price as of last night was $45.63. Our target price that we did was $66.26. So you guys will see that we did 100% for free cash flow to the firm. Our decision behind that was Planet Fitness used debt to finance operations and growth most recently, so we kind of want to go off their most recent stuff. And the risk-free rate that we used was the T-bone rate from Demoterin of 2.4. The equity risk premium we also pulled from Demoterin, which was 5.08% for the free cash flow to the firm. And then the beta was 1.15. And for the terminal value growth, we did use the US GDP for 2017 of 2.3% because we thought that was pretty safe. And kind of also why we didn't choose the price to earnings is because the companies that we pulled for comparables weren't really apples to apples, because most of the ones that are apples to apples are privately owned, so that it's really hard to find information on that. And then for the, let's see, yeah, that's why we did that, and that's where we got our target price from. So if you look at our target price, it's a little above their 52-week high, which was $53.25. So we thought it was pretty relative.
And then this graph just kind of shows the growth of them compared to the S&P and Russell. Just if you were to invest $100 closing price on August 6, 2015, just kind of, this is the S&P and the Russell, and then Planet Fitness just kind of has been taking off. So then next is our 3 points here, why Planet Fitness. So the first one isn't really about Planet Fitness, more or less the fitness industry and how much it's been growing over the past few years. Everyone seems to be on new trends of being healthier, working out, what they can do to like make their bodies healthier, I guess. So just a couple of things. In 2009, the market size for this industry was $67 billion, and currently in 2017 it was $87 billion. So that just shows a little bit of the growth of that industry and why Planet Fitness. Our second point is how they have everyone is welcome. So in the fitness industry right now, people who want to be it are already in it, and they're probably, I don't know, at like say a CrossFit gym, doing yoga, stuff like that. What Planet Fitness is targeting are the people who aren't yet at a gym, and they don't want to be, they're almost scared to work out, I guess, or go to a CrossFit gym and be judged by people who are doing that. So their big thing is everyone is welcomed, so you can go there. It's very low priced. They have signs like no critics, everything like that up there, so you can just kind of go do your own thing, not be judged. And then our final one is predictable financials and growth. So when looking at their 10K in 2015, they said they wanted to open around 200 gyms per year for the next 3 years. First year they opened 189 of them, and the next year they opened 205, so pretty much dead on their goal of 200 a year. They just signed another thing to open 1,000 more gyms in the US and over 100 in Canada. So those are just the 3 points.
And kind of to add to the second point about everybody is welcome, so they do have two memberships. One is $10 and one is $21.99 a month. They do have a lot of things that go into both of them. the two things that they have that are the same that go into both of them is free training, so kind of how Riker said, people that aren't necessarily comfortable going to the gym, they're trying to attract those new people by, showing them how to work out, what to do so they're not intimidated, and also the people that do go regularly have the option to have training just to use more resources.
So on the left here, this is just revenue in just the US of the industry, health and fitness industry, and how it's been growing. And then on the right, this is pulled from their 2017 10K, so it shows their total stores, total memberships, company revenue, net income, how they're obviously growing in almost all these aspects as well. So as the industry keeps growing, that's good for Planet Fitness because in turn they're just going to keep growing that way as well. Next, everyone is welcome to approach. We already got into it quite a bit, but this is what they have. So including occasional gym users and approximately 80% of the US and Canadian populations over 14 who are not gym members. That's like their target people who they want to continue growth. If you look at the chart down here, it's obviously for people who are kind of mid, lower income. It's not going to be for high rollers. And when you have younger kids who are just starting to get into workout and stuff like that, they're just targeting people who, I guess, aren't hardcore working out people, but looking to just get everyday activities.
So as far as the competition goes, we did pull our competitors from Bloomberg, and we based that off of initially the market cap, so they're all relatively around the same market cap. As far as what they do, it's pretty different. Some of these companies do participate in fitness clubs, but most of them do other things like operate bowling alleys, and they also do karaoke. That was a big thing, and most of them are in China and Japan, so they're not traded in the US as well. But as far as direct competitors go, as far as how the business actually operates, is Gold's Gym and 24 Hour Snap Fitness. They're just privately owned. That'd be a more apples to apples comparison.
One thing of benefit for over their competitors, as these are privately owned, since Planet Fitness is public, they get that extra cash from investors. So over private gyms, that could be an advantage. And also looking at their PE, it's obviously way higher than a lot of their competitors. And this is just basically how they've been growing so fast. Is kind of the main driver for them looking to open up so many new gyms.
And then as far as how we looked at their financials, so they did have quite a bit of sales in 2017, that's $2.3 billion. And how they define their sales are by their monthly dues and annual fees billed by themselves and by their franchises. So they're mostly franchised, so that number's hard to see, but that is 96% of their revenue comes from franchises. And then they do have 62 stores that are corporate owned, actually by Planet Fitness, and that is only about 4%. So they earn most of their revenue off of royalties from the franchises.
And then a big thing in the 10K was the four-wall EBITDA. I don't know if you can pronounce that, but it's basically they do this to see how each individual gym is doing itself, not the whole company. So it kind of takes away the corporate stuff like that. And their average is only going up every single year. And this is due to a higher percentage of their Black Card members, which is the higher membership option, and then also just a lower. And then this picture here shows just kind of their strategy for growth. They're obviously heavily over here in the United States, so they're looking to grow into this side and into Canada a lot more than what they already are. And then just looking at the four-wall EBITDA, they continue to grow, and they see that as a very positive thing to look gym to gym, and it means their franchises are doing their jobs at each individual gym. And then those are where we go, most of our things. Their risks, if you flip to the second last page, we have our risk list there. One of the biggest things they listed as risks is just, since they have so many franchises, making sure that each company is doing the right thing that Planet Fitness wants them to be doing. Because having franchises can sometimes hurt yourself. One franchise affects, say they own 50 Planet Fitnesses, that can affect a lot of them. It's just making sure their franchises are on the same page and knowing what they're doing.
And as far as additional catalysts and news, so they're about ready to report their third quarter earnings November 6th. All of their projections so far from previous quarters have been positive, so we're expecting the same thing And they do not have any material debt due within the next 3 years, so I think that'll also be pretty positive for their next, third quarter results.
And one last thing, they've only ever paid dividends once in their whole entire history of the company, and it was to a company called Plafit, which is a subsidiary that Planet Fitness made, basically I read, so they could get away with some tax stuff. So they made like a subsidiary for like tax reasons, and then for some reason one time they paid dividends.
Okay. So none, the dividends didn't actually reach common shareholders?
Yeah.
Okay. Question on the balance sheet here, okay? So it looks like their debt to EV decreased in between 2016 and 2017. But they've had quite a fair amount of debt financing. Is there a reason why you didn't calculate interest coverage?
We couldn't find it, and we saw, and I found in the 10K though, that they don't have any material debt due in the next 3 years, but it's all due in 2021, and it was like 600 or 700 million, just because of the way their loans were set up. So they had a couple of like revolving credit lines that they used to get a lower interest rate to pay off a different loan, and I can look more into that, but they did have a section.
And then, do you like the franchise business model? Do you think that's more attractive than if they just owned all those gyms themselves?
I think so, yes, because we did put it as a risk as them being a franchise, and people can sort of trade the franchise differently, so people be like, oh, I had a bad experience with this Planet Fitness because it's a little different. But I think in the long term it's better because they don't have a ton of inventory or anything like that, because the people that are the franchisors are buying that and responsible for that up to a certain extent, so.
And then, fitness is kind of a notoriously fickle space, or a space where there's a lot of trends that kind of come and go. Why do you think Planet Fitness will continue to post such like they've had tremendous growth in the last few years? Do you think this is something that can continue, or is the market going to be saturated, or will trends kind of
I think
veer
just
away?
because like those like trends like spin, yoga, like CrossFit, those type of things, like people who want to do that will do that, and it's like goes in and out of that. But like Planet Fitness, like for just a general population to go work out is always going to be there for people.
They have your like basic workout stuff that never really goes away. And as far as their memberships are concerned, they kind of keep up with the times, whereas they don't necessarily offer CrossFit, if you want to call it that. But they do offer other benefits such as unlimited guest privileges and free Wi-Fi, which I know is a big thing for people when they're working out, whether they're streaming their music or whatever they're doing while they work out. So I think, and their price point is pretty low compared to the industry average with all of those amenities, so I think that they'll continue to grow.
And generally, their valuation, like their PE, looks like it's pulled back a little bit since 2017, but it's what we call a fairly rich valuation. Like it's definitely trading at a relatively high PE. So do you think that their growth is going to be able to justify that PE ratio?
I think so. I was looking like when analysts look at like a high PE, they're considering there's like overvalued of stock, which is one of the things I was looking at, because compared to their comps, they have way higher PE. But and then looking at their like plans for how much growth they want, I think it's fine, and it's not really something to worry about because they have been hitting all the benchmarks they're setting out for growth with their company.
You might consider looking at their PEG ratio, right? So just putting that PE ratio over their revenue growth, right, or earnings growth, excuse me. Just to give like another kind of benchmark there to think if that's justified by their growth. Has anyone here gone to the Planet Fitness in Fairbanks? Okay. And
I didn't work out there, I just did it for a class. I interviewed them about their business model.
okay, well, that's even better. Then you have insight. You've talked to a franchisee. What was your take on the?
They rely solely not solely, but they rely a lot on their customer service. Yeah, I mean, their workout equipment, they said that their main, like, people that they're selling to is older people, not people that are actually fit, like you guys were saying. It's very sound, and they have, like, most of the market, they have thousands of people have memberships across Fairbanks. They're not worried about going out of business, they're doing very well. Their biggest risk is just if they hire people who don't have the same values that they have, then that's where they've lost customers. There was they hired a teenager or something like that, and during the night, because they have a 24-hour policy, he would go on and he would watch Netflix, or he would be on his phone and stuff, and people thought he was either taking pictures or recording or something like that. And that's another policy that they have, is that you're not allowed to record anything, you're not allowed to take pictures while you're in the gym. And so they had to fire a couple of people because they have that's one of their biggest things, is their customer service. And so they fired the employees that were doing that, and that's exactly what they said. The franchise, they make sure that that's what they're doing, that their franchisees are.
So this is a gym that caters to grandmas, or whatever.
Senior citizen population is.
I see like a chart there.
Did a little bit.
That's what she said. That the manager of the thing is like, we have a lot of older people, like not like 70s, but like people between 40 and above.
Did they say like why people choose Planet Fitness other than the Alaska Club, of course, of like the difference in membership dollar values? Like $100.
Just the whole thing of just like, they don't get judged, and they don't get there's no recording, and it's just a good environment. If anything goes wrong, they are able to fix it immediately and efficiently and very quickly.
People that I personally know use it for the showers and tanning, the $20 membership, because that's all included. But I don't know, since it is a fitness club, if you want to base it solely off that, and I don't know if that's how they all are. Fairbanks is so unique,
So,
yeah.
okay.
Yeah, from what I've heard about these guys, is they have a pretty big negative connotation about health. Like a lot of their places have snack Fridays where they serve pizza,
Yeah, they have pizza
cookies, yeah, stuff like that. And they have part of the reason they attract the elderly, I guess, is because they have alarms and stuff like that, where if you make any noise above a certain decibel, the alarms go off and they kick you out and take away your membership. And people have gotten really pissed off. Yeah, these alarms go off and the employees come and they kick you out and take away your membership.
You've been kicked out?
Yeah.
Hey,
No, me? No.
you get a
You're lifting too loud, sir.
Yeah.
Third warning.
Well, yeah, so a lot of people don't like it because they also, a lot of them they don't have free weights and things like that. So it's more for the elderly. And then you guys were talking about the growth in the fitness industry. And isn't a lot of that growth not due to the brick and mortar gyms, but more to the mobile and online fitness that's just now coming in? Aren't the fitness crowd being more attracted to that than going to the brick and mortar?
Well, I think when looking at that, number of memberships is continuing to go up. So, and, online, you can just go on YouTube. You don't really need a membership. So looking at
Well, not YouTube, but companies are creating mobile.
The way I think about it, and I think that's a valid question, because we've already talked a little bit about the demographics that go to Planet Fitness. You guys in the room are not the target demographic. Most of you guys are too young and too fit to probably be the target demographic for Planet Fitness. The kind of person who would be interested in a gym that has a $10 monthly membership and kind of this no judgment policy, it's usually people who aren't very into working out. These aren't your hardcore athletes. These aren't your fittest people. So there might be some question about whether these people would be interested in some alternative that they can do in their living room as well. So that's something to think about, that digital trend. But I think as Riker's kind of pointing out right there, their growth rates have spoken for themselves, at least for the last few years. They've had some pretty attractive membership growth and top line growth. Okay, other questions from the class? Okay. Are you guys comfortable voting on this today? I think if I were to suggest a couple of follow-ups, it would be maybe to look at their PEG ratio. I'd probably have some concern or some question around their debt and their ability to pay it off, and what's going on with their financing. So we could table a vote till next class, to allow you time to follow up on that. Otherwise, I think there's actually enough information that you guys could vote today if you want.
So you want us to do like Thursday next class or Tuesday next class? for follow-up?
I would say Thursday next class. Do you guys wanna wait until Thursday, or do you wanna vote today?
We can wait until Thursday, but their earnings do come out next Tuesday. So depending on what you guys wanna do, if you wanna wait till after earnings to buy it.
Well, if we think they're bullish, we should buy them before the earnings.
Yeah, but, so it depends on what time their earnings come out on Tuesday, we can,
So have you thought about what you would propose to sell?
Not yet, because we're pretty on point we're only like 0.30 underweight, if you want to count that as being super underweight. So we haven't even talked about that yet.
So I'd say look through the holdings in the sector if you wanna make a one-for-one switch. Especially, well, if you guys think we wanna buy this or talk about buying this before they report earnings, then we'll have to have the sell kind of lined up as well.
Okay.
So the other option would be to say that you think you wanna be a little bit overweight in this sector and maybe say trim one of the ETFs we have instead. So that's another option to think about. That's like the easy proposition.
You can also trim one of the current holdings in discretionary, right?
Yeah.
Okay.
Okay.